Hi traders, welcome to another edition of weekly forex forecast on FSLess, which is for 8th to 12th of June 2020. In this week, I'm going to share with you guys the list of currency pairs I am watching out for next week, should in case of trade breakout opportunity. If today is your first time viewing my YouTube channel, you are welcome. And then do not forget to like, share, put a comment down, hit the subscribe button as well. Click on the notification bell so whenever I release educational content of this kind, you're gonna be the first to be notified. Remember, forex trading is an high risk investment as well and high reward investment. So do not trade with the money you cannot afford to lose. Here are the list of currency pairs I am watching out for next week. I have the British pound sterling against the USD, I have the euro against the USD, I have the USDPY against the Japanese yen, I have the New Zealand against the USD, I have the euro against the Japanese yen, and then we're gonna wrap up things with the US oil. So let's dive into the weekly forex forecast right now. The first currency pairs on our watch list is the British pound sterling against the USD. And then we can see our price made the rotation of downward trend right here, whereby we have price breaking throughout this key level structure, which are rejecting price from the key level structure of 1.20045. We can see rejection of price, and then right here we had a breakout of this zone right here, whereby price enjoyed daily close back into this medium right here. There we had another no rotation of price outward, whereby we had two fake breakout of this zone. So let's check this movement on the 4-hour chart. Here's the 4-hour chart of this currency pairs, and then we can see the first breakout right here, we have the second breakout right here, and then we have a high right here, a high right here, and then what we can see right here is a pattern of change in trend, whereby we have a low right here, we have a high low right here, we have a high right here, and then a high high to this no high right here, and then we have what, another low high which was being rejected by our key level structure, which is at the 1.22045. So let's check back on the daily chart frame. You can see that, and then price ensured back a daily close into this medium right here, and then price retested our dynamic support trend line right here, which we expected to act as a dynamic resistance for the trend on an upward rally right there. Actually, this dynamic trend line failed to act as a dynamic resistance trend line, and then we can see the bullish momentum which actually occurred right here, whereby the bulls ensured a daily close above this dynamic trend line, and then whereby they actually broke this minor key level structure, which are represented with a blue horizontal line. For the fact we had two consecutive breakout of price out of this medium right here, which means this level structure is not active as it was at this zone right here, whereby we have no price rejection right here, and then acting as a resistance for this upward rally right here. So for the fact the British pound sterling enjoy a daily close and then retesting the next key level structure, which acted at 1.27509. Checking back on the historical record on our trading chart, we can see this key level structure right here, which acted as a support for this upward rally right here, and then right here we can see this key level structure right here, which acted as a support for this upward rally right here. This makes this zone a very important point of interest for the bulls and the bear next week. So we need to pay a close attention to this key level structure, which acts at 1.27509, to see what the bulls and the bears have to get done. Take note, a daily close above this key level structure by the bulls, then it means the bulls are willing to expose the next key level structure, which acts at the key level structure of 1.32022. And then if the bulls fail to ensure a daily close above this key level structure right here, whereby the bear comes in next week, whereby they make a rotation of price downward to the previous minor key level structure, which acts at 1.25195, then it signals the bears are not yet giving up in this rally from this swing right here to this upward rally right here. Then if the bears ensure a daily close below this minor key level structure, which acts at 1.25195, then I wouldn't be surprised if the price of the British pound sterling against the USD drastically depreciates in value to the previous key level structure, which acts at 1.20045. So at this key level structure next week, we need a defined price action signals to give us a clue of what the bulls and the bears have to get done at this zone. Maybe the bulls are gonna enjoy daily close and then retest the next key level structure right here, or maybe the bears are gonna come in to pull price downward to the previous minor key level structure, or maybe to the next previous major key level structure of the 1.20045. So next week, I'm watching out this currency pairs to see what the bulls and the bears have to get done at this zone. Next on our list is the euro against the USD. It was an aggressive bullish rally for the euro currency pairs last week, and congratulations to the VIP members. No, we actually took our trading position right here where we left from that was a previous week to the last spent week, and then it was a massive profitable trade. So what are we looking out for on the currency pairs of the euro against the USD next week? First, let's analyze this currency pairs. So from this base swing right here, we had a series of support right here, key level structure, which rejected this trend in a strong bullish upward rally. And again, we can figure out a key level resistance zone right here, which acts at a 1.09892, which actually price was being rejected at this key level structure right here. We can see the massive rejection right here, whereby price made a continuation to the upward rally. And then we can see how price actually broke this swings high right here, which acts at the key level structure of 1.11502, which acted actually as a key level structure for the shoulders of this head and shoulder right here. You can see key level structure for this shoulder right here, then shoulder right here. And then price since then continues to make an aggressive bullish rally upward now to this key level structure, which acts at a 1.13370. We can see how we had a rejection at this key level structure right here. You can see these swings high of this candle bar formation right here, and then we can see the bearish rally downward right here. You can see the rejection right here by bearish pin bar right here, and then rejection of this bearish candle right here, whereby we had a massive bearish trend downwards to this key level structure, which are the lowest swings of this currency pairs in the year 2020. That was a key level structure of the 1.06554. So price is now at this key level structure again. So what are we looking out for at this key level structure next week? We can see last week Friday candle was a bearish formation candle right here. We can see whereby the daily close below the key level structure, which acts at a 1.13370. Actually, some traders might have been thinking this is a formation of a dark cloud candle formation. So what makes a potential dark cloud bar formation? So let's figure out. As a dark cloud, the bearish candle must actually close below the midpoint of the bullish bar. So let's say, for example, we have a bullish bar like this formation, and then we have a dark cloud. It must actually close below the what? The midpoint of this bar right here, whereby this dark bearish candle must close below the bullish bar somehow like this. So this is what makes a dark cloud bar formation. So we actually going to measure this candle right here to see if it's a potential dark cloud formation. So if I should measure from the high of this wick right of this bullish candle to the low wick right here, that is 170 pips. So the half of this candle formation should be 85 pips. So let's measure the midpoint. The midpoint right here, that is 85 pips. We can see that is the actual exact value which this bearish bar formation actually stopped, and then we can figure out a retracement back to the price pips level of the 75. Can see that. So this is not a potential dark cloud. And then let's figure out on the 4-hour chart. On the 4-hour chart, we can see a bearish pin bar right here. Actually, I love to figure out my trading decision on the daily chart, and one of the things I love to check out is the degree of a slope of a trend to see how strong, aggressive a slope of a trend is. So this will help me to decide my trading decision. Actually, I love to put into consideration different kind of confluence factors to support my trading decisions. And you can see right here the slope of this trend rally right here, it's that is a 47.3 degree, which shows this trend right here, it's a very bullish aggressive rally. So don't be surprised if price made the rotation downward right here, and then we have a reversal of trend, continuation of trend to the upward rally like we did have right here downward. We had right here, you can see we had no right there. So trying to go counter trend against the trend is somehow very, very risky. Not only if I figure out no there is a decreasement or weakness in momentum of such trend. So right here I can't still yet figure out no weakness in bullish momentum right here. Price can make a rotation downward right there, and then we have no resumption of the bullish rally. For the fact our slope right here is still no 47 degree, no, so this is still a very strong bullish aggressive right here. So we are very careful if you want to short the euro against the USD. So I want to figure out a well-defined price action on the daily chart before I can make my decision to go short on this currency pairs right here. And take note, the next swing high right here, we have a swing high right here. If the bear successfully ensured a daily close below this level structure right here, let's check the measurement of this region right here. That is the level of 1.12393. So if the bear successfully ensure a daily close below this key level structure right there, then I wouldn't be surprised if the price of the euro against the USD drastically depreciate in value to the previous key level structure, which acts at a 1.11502. Alternatively, if the boost comes in next week whereby they ensure an aggressive rally upward, whereby they put price to make a close above this key level structure, which acts at a 1.13370, which is actually an active resistance zone for the price right here now, then I wouldn't be surprised if the price of the euro against the USD drastically appreciate in value to retest the next key level structure, which acts at a 1.14945. So we have to pay a close attention at this zone right there to see what the bulls and the bears have to get done. Maybe the bears are gonna ensure a daily close downward right there, or the bulls gonna come in next week, maybe Monday next week, or candle formation on Monday is actually gonna give us more information of what the bulls and the bears are actually gonna get done right there. A gap above and then close above will give us there is a more bullish strength, and then a gap below and then close below this key level structure right here at the swing high right here, then we give us more information. The bears are still active and they're still willing to retest the previous key level structure, which acts at a 1.11502. So I'm still paying a close attention to this currency pairs next week. Next on our list is the USD pair against the Japanese yen. It was a nice defined setup of trade last week on the USD against the Japanese yen. We can see our price broke through this narrow bearish wedge right here, and then price actually went through a state of consolidation at this medium right here. I announced my trading strategy to the VIP members on this medium right here, and I said I actually had a pending order above the structure right here. So I am in anticipation of price to break out of this region, whereby I had my stop loss this swing slow right here. And then you can see how the market made a massive breakout and then to the upward zone right here. So what are we looking out for on the USD yen next week? For the fact we can see price actually close above this key level structure, which acts at the price value of the 109.332. We can see the bullish candle right there, even though we have a little bearish prayer at the top of this bullish formation. I have been emphasizing on the USD Japanese yen for the past weeks right now. I said we need a monthly close above this our dynamic resistance trend line, which acts at this zone right here. Let's figure out that on the monthly chart. Here is the monthly chart, and then you can see we already had a breakout of this dynamic resistance trend line, but we have to put into consideration a monthly close above this dynamic resistance trend line is actually what we need before we can know the next direction of the movement of the USD against the Japanese yen. So a monthly close above this dynamic resistance trend line right here has a probability to suggest more bullish rally to the next key level structure, which acts at the 111.317. We can see the swing high low right here, and then high low right here, high low right here, high right here. You can see the low high right here, the low high right here, and then low high right here. So if the bulls can ensure a movement of price above this previous low high right here, then it's a signal of a change from the bearish momentum downward right there to the bullish upward rally right here. So I wouldn't be surprised if the price of the USD drastically appreciate in value against the Japanese yen, and then this actually have high probability to extend on a long multi-year bullish rally. You can see the highest swings right there, which was dated back to, that was 2015. And then I wouldn't be surprised if the boost ensured no price rotation upward to clear off this key level structure, which acts at a 114.461, and then the next key level structure again, which acts at the 118.575, and then which may open door for the bull to retest the highest swings of this currency pairs right from the year 2015. Can see that. So I am still watching out this currency pairs, even though I'm still having a position. I'm on a long position on this currency pairs, and I am still holding my position right here, whereby I have my stop loss below the swings low of this reversal bullish bar right here. So alternatively, if the bears comes in next week, whereby they made the rotation of price downward below this key level structure of the 109.332, whereby they ensure a daily close downward, then it's a signal the boosts are weak right here to ensure a pull up of price to retest this dynamic trend line on the daily chart frame. And I wish I wouldn't be surprised if the price of the USD against the Japanese yen drastically depreciate in value to the previous key level structure, which acts at 107.912. But take note, the boost have to defend this key level structure. Failure for the boost to defend this key level structure, then I wouldn't be surprised if the USD currency depreciate in value against the Japanese yen to the previous key level structure, which acts at 106.913. And then if this should happen, it means the USD against the Japanese yen is still fluctuating through this symmetrical triangle, which we had on the monthly time frame. So I'm still watching out this currency pairs next week to see what the boosts and the bears have to get done at this one. Maybe the boosts actually gonna defend this key level structure, or maybe the bears are actually gonna make a rotation downward before I can act on my next trading decision right here. And then remember, I had my stop loss at this key level structure right here. Next on our list is the New Zealand pair against the USD. If you watch one of my last analysis on the New Zealand against the USD, I emphasized I don't want to short this currency pairs at this zone right here, whereby some traders actually executed a shorting position right here with the belief this trend is going to pull downward right here. I said I can't short right here for the fact price is not retesting the major key level resistance zone right here, which acts at the level of the 0.61946. And then we can see right here how the market maker strict the sellers right here, whereby we had a massive reversal trend to the upward rally right here. Actually, I and the entire VIP members, we took advantage of this trading opportunity right here. We had a position size right here, and then last week it was a very aggressive rally for all the New Zealand currency pairs, even though we executed a lot of trade on the New Zealand currency pairs as well, the New Zealand Canadian dollar as well. So for the fact this currency closed above this key level structure right here, and then above this next key level structure, which acts at the 0.64417, what are we looking at for next week? We can see this key level structure right here was a resistance level for the downward rally right here. That was the lowest swing low of this currency pairs in the year 2020, and then we can figure out right here it was a resistance for this rally right here before we had a breakout of this zone to this swings high right here. And then since then at this swings high right here, price had been carving a low high right here. And then last week we can see how Thursday candle right here and the Friday candle actually closed above this previous low to this high right here, which is a signal of what this is has high probability to transform into a change of trend. So what am I looking at for next week? For the fact we had two consecutive bullish bars closing above this level structure right here, I am still in anticipation for a more bullish upward rally. And then if the bulls make a rotation upward right here, they need to clear off this dynamic resistance trend line, which acts at the intersection of 0.66320. So let's zoom in so we can figure out how long this trend line had been in the market. Okay, we can see right here we had the first swing right here, second right here. Okay, so the bulls have to clear above this dynamic trend line to retest the next key level structure, which acts at the price level of 0.67535. So I'm gonna zoom in back. Okay, zooming now in on daily chart. The bulls have to break out of this dynamic trend line right here, then to retest the next key level structure, which acts at the 0.67535. Alternatively, if the bears comes in next week whereby they pull price downward, the bulls have to defend this key level structure, which should act as a support for the bulls, which has the 0.64417. Failure for the bulls to defend this key level structure as a support, then if the bears ensure a daily close below this key level structure, then it means the bears are willing to pull up price to retest the previous key level structure, which acts at the 0.61946, and then which has high probability to turn this trend right here into what? A low high to this low high right here. Let's zoom in right now. You can see we had what? A low high right here, and then a low high right here, and a high right here. So I wouldn't be surprised if this zone is now turning into a new low high. So next week, my trading decision on this currency pair is to figure out if I can see a pullback of price, and then if this key level structure can actually reject price, whereby I can figure out a bullish price action like we did add right here, then I'll be willing to add to my position to go long on this currency pair, and this may actually lead to a breakout of this dynamic resistance trend line to retest the next key level structure resistance, which acts at the 0.67535. Alternatively, the bear comes in next week, then I will have my stop loss being cut out of this zone right here. So I am still watching out this currency pairs next week to see if I can add to my position right here. The next on our list is the euro paired against the Japanese yen. And then if you watch my last analysis on the euro switch, I discussed about the potentials I can figure out line on the euro currency pairs, and then we can see the massive bullish rally on the euro yen that was the last week. And then we can see right here, for you to make a breakthrough, to make constant profit in the market, you have to focus on price action. Using the indicators can never help you in this field. You can see right here, our price action showed us this an aggressive bullish upward rally. And then this where you need to apply the rules, which says let your winning trades to keep on running, and then you cut your losing trade fast. Right here, this is actually what we implemented on this currency pairs right here. We keep on trading our profit, we let our profit to keep on running. So I'm going to measure this rally from this key level structure right here to this peak right here. That's 584 pips. And there's something I want to show you guys on the weekly chart of the euro against the Japanese yen. This is the euro against the Japanese yen on the weekly chart, and then what can you guys figure out right here? This is a price fluctuation within a bearish channel, and then we can see our price broke this weekly bearish channel right here. We can see that our price has been fluctuating through this medium right from January of 2018 to this swing low right here of this year. And then we can see how the bulls ensured a massive bullish aggressive bar above the dynamic trend line resistance of this bearish channel, whereby they broke the first key level structure, which acts as the 121.012, and then they move ahead to break the next key level structure, which acts at the 122.664, whereby they ensured a healthy bullish bar above this key level structure, which is a signal of a bullish LD trend. So I'm gonna get back on the daily chart. On daily chart of this currency pairs, we can see right here the key level structure at this zone right here is the price level of the 122.664. So the bulls have to defend this zone next week. Alternatively, if the bulls fail to defend this key level structure, then I wouldn't be surprised if the bear steps in to make rotation of price downward to retest the dynamic trend line of bearish channel right here. You can see, which is an intersection with the horizontal key level structure of the price level of 121.012. So if the boost fail to defend this key level structure right here, here is another good point, entry zone, whereby we can look out for well-defined price action signals to enroll for the continuation of this no bullish rally right here. We can see in the first breakout, there's high tendency. We have what? A retest of this no dynamic trend line, which as price action traders, we are expecting to act as a dynamic as a dynamic support trend line, and then a key level structure which acts at this zone whereby we are looking out for to act as a support key level structure. So there's a lot of confidence factor we have to put into consideration right here before we can actually long this currency pairs right here, and that is if the bulls fail to defend this key level structure right here. Alternatively, next week, if the bulls defend this zone whereby they keep on making rotation of price upward, I wouldn't be interested to add to my position right here, because I don't want to buy high. Instead, I want to look for a pullback, look out for a bullish price action right here before I can surely go long, or look out for a bullish price action about at the retest of this dynamic trend line right here and the key level structure right here. In fact, this is the best zone to look out for trade opportunity on this currency pairs of the euro against the Japanese yen. So next week, I am looking out for trade opportunity at this key level structure 122.664, or this intersection of the dynamic and the horizontal key level structure of the 121.012. It's time we wrap up our analysis with the US oil. On the US oil, we can see our price broke our dynamic resistance trend line right here, and this is then price had been in a bullish rally. Actually, I took advantage of this trading opportunity right here, and I shared my trading decision with the VIP members as well, and then we had a lot of profit right here, and then we actually are still trading our profit right here, and then at this zone right here we had our trailing stop. So that is nice trade. And what we need to do right here next week is, for the fact US oil is actually about to retest a major key level structure which acts at the price level of 41.77, then we have to pay a close attention right here, and then we can figure out right here this was the actual zone whereby we had a breakaway out of this rally downward right here. That is breakaway gap right here. Can see the gap right here on my chart right here, where it all depends on the brokerage firm you are using. So, and then since then we had a massive rally, and then we had a change of trend, and then we can see right here this lows right here, there was a change of trend at this medium right here, and then we can see the confirmation right here now. So if you are trading the US oil, the best place to implement your stop loss right now should go below this bullish pin bar right here. So what am I looking out for on the US oil next week? For the fact price is approaching this key level structure right here, I want to see what the boosts have to get done right here. If the boosts can ensure a daily close above this key level structure right then it's a signal the boosts are willing to pull up price to retest the next key level structure, which acts at the price value of 49.34. And then if the boost failed to defend this key level structure, maybe when the best pull by price downward after the first breakout and the boost failed to defend this key level structure right here, then whereby the bears ensure a daily close back into this channel right here, then I wouldn't be surprised if the bears retest the previous key level structure, which acts at the price value of 35.06. And if the boost failed to defend this key level structure right here, then I wouldn't be surprised if the price of US oil drastically depreciate in value to the previous key level structure, which acts as the price of 21.09. So next week I am paying a close attention on the US oil to see what the bulls and the bears have to get done at this medium key level structure of the 41.77 and this key level structure of 35.06 before I can actually know my next trading decision. So guys, that is all I have for you in this weekly forex forecast. Make sure you have a set of trading rules which is gonna guide you in whatever trading strategy or trading activity you want to execute in the financial market. And then if you haven't joined my free forex trading class, there's a link at the bottom of this video make sure you click on that link so you can get access to my free forex trading class. 3 times in a week I do hold free forex trading webinar class. In this class you can ask me whatever question you wish to know or any problem challenges you have in the forex market, and then I'll be very happy to give solutions to your questions. And then I have a lot of content at the bottom of this video. These are the boosts which can help you to become a professional technical trader, fundamental trader, psychologically, to be balanced, to be disciplined, how to control your emotion. And then our other boosts which is going to be beneficial for you through your process of becoming a successful trader you have always wanted to be. Do not forget to like this video, share this video, put a comment down so I can know how you feel. Also, do not forget to subscribe to this YouTube channel. Click on the notification bell so whenever I release educational content of this kind, you're gonna be the first to be notified. So that's all I have for you in this weekly forex forecast. Do have a wonderful weekend. Peace.